Hi, accounting students. In this lesson, we are going to look at how to analyze and begin the thought process behind processing transactions that use our expanded ledger, specifically the expense and revenue accounts and drawings and capital accounts. So what we're going to do in this activity is we've got 10 transactions here, and I'm going to work through the first 5 with you, and then your completion task will then to be to do the second set of 5 and then submit them to the appropriate Dropbox. So those are our transactions. On the surface sound like pretty kind of regular stuff, a little bit more focus on the capital accounts, and we're going to see how these kind of work, how they play out. And so you're going to need then the expanded ledger part of it, the worksheet. So again, this is simply a way of kind of being able to organize the information that we have, excuse me, and then use that information here to decide whether or not we're going to debit or credit our accounts. So looking at our available accounts we have to use, we have our bank account. They're in no particular order. We've got a bank account, an account receivable and payable, and then you'll see down here a few things that we're not really used to. So we've got a capital account and then the drawings account for withdrawals. We have accounting fees earned, commissions earned. So typically a lot of the work we do only has one revenue account. These are both revenue accounts. Usually we can tell that because they don't have the word expense in them. Often they will have the word revenue or earned in them. In this case, we have 2 different revenue accounts. And just in case you're not kind of used to what some of these things mean, or if this is a little bit different, typically fees are flat amounts of money that are paid for goods or services. So when you buy a chocolate bar, essentially, in a way, it's a fee. It's a flat amount. No matter which chocolate bar, more or less, you're going to pay the same thing. A commission is usually a percentage earned kind of payment. So if I'm a real estate agent, for instance, and I sell a house, I'm entitled to 3 to 6% of whatever the value of the house was when it was sold. There isn't usually a great mystery around which one to use, and we'll kind of talk about that. Usually, if it is a commission, it'll say in the instructions somewhere that it's a commission, or that that person earned certain percentage on the sale. So we'll see that. We don't have a lot of it, but we'll see kind of how these are used differently. And then down here we have all of our expense accounts. Now, just kind of remembering our rules and thinking about increases and decreases. So whenever we have, so just to kind of set it up to our T account, we will do or think about both as increases, and then we can use deduction to figure out the other. So for instance, we should know pretty quickly by now that anytime there's an increase in the bank account, it's going to go on the left or debit side. Accounts receivable, when people owe us more money after the transaction than they did before, it's going to be also on the debit side. Our account payable, when we owe more money to other people, we show increases as credits. Capital, we should know pretty quickly that that is a credit. A drawing, in a way, it's good to know the theory and the idea that a drawing is kind of an increase in how much we're taking away from the value of the business. But if you can remember that an increase in capital is a credit, a drawing is a decrease in capital. So by default, we're going to put that on the debit side. Any fees earned are going to always be credit. Those are increases, and then as we talked about in the last video, expenses always go as debits until the very end of the year. So, and really a lot of these are quite easy, like in that, except for the one time at the end of the year, which we're going to cover in the next unit. All of these transactions are always going to be the same. Whenever you have a drawings entry, you're always going to have a debit to drawings. Whenever you have revenue accounts involved, they're always going to be credits. And then the same thing with expenses. Anytime you receive a bill, it's going to be a debit to those expense accounts. All right, so let's have a quick look at our first transaction. I think it's an easy kind of warmer upper. Yeah, so here we have, we've performed an accounting service for $100 cash. So we should know right away there's no account receivable or payable involved. We got cash, and we're doing our accounting service. So we are going to need one of our revenue accounts. So going back over to here, so we know that we keep our cash in the bank account. So I'm going to list that right away. And looking over here, prior to this lesson, we would have put it into the capital right away. But in this case, we now have these two revenue accounts that we can work with. So going back to the transaction, here it says that we have performed an accounting service. Since it doesn't specifically say that there was commission involved, we're going to assume that it was a straight up fee. And so in that case, we want to use our accounting fees earned. Next thing we're going to do is decide whether or not, what kind of account this is. In this case, bank is an asset account, accounting fees earned is revenue. So just reviewing, we have assets, liabilities, revenue and expense, capital, and drawings. And so this is a revenue account. It represents money coming into the business. And as we said, or noticed before, it's $100. Now the question is, do we have more or less of these things? And so we should know that we have more money now than we did before the transaction. So that's going to be a plus. Our accounting fees earned. Our accounting fees earned is also an increase. We have more value of service that we've provided for our customers now than we did before the transaction. So we're going to list that also as a plus. With this, with Excel or spreadsheets, you have to put in a little space bar there to get it to go to a plus sign. Otherwise, it thinks you're doing a math function. So looking over here at our quick and dirty chart then, we have an increase to our bank account, and so that is going to be a debit to bank. And we also have an increase to our accounting fees earned. So we're going to go down here, accounting fees earned. So increases to those are listed as credits. And so now, even though we have two pluses, we might feel kind of uncomfortable with that. We can feel good in the fact that we have equal amounts of each debit and credit. And that's really what we're worried about at the end of the day. All right, so that's transaction number 2. So we can go and kind of put a little mark in here to show that we've done it. All right, so here, this is an example of what I was talking about earlier. It specifically mentions the words commissions. Again, it's in performance of an accounting service, so this isn't money we're paying out, it's money we're receiving. So we're going to process this exactly the same way as we did the last one. The only difference is we're going to use a different revenue account. It's still, it doesn't really say that, like it's kind of implied, but we've received $500 cash. So there's no accounts payable or receivable. It's being paid in the moment for this accounting service. So going back over here, again, where do we keep our cash? Well, in the bank account. And we want our accounting fees earned, but this time we're going to use our commissions earned instead. Sorry, we need revenue account again. We're going to use the commissions earned account instead. All right. So having said that, then we have, again, an asset account. This is the other revenue account, so that's an R. This time the value of the service was $500. We, again, just like before, we have $500 more now than we used to. And we have the value of our business, of our revenue that we've earned has also gone up. It's increased from before the transaction, also by $500. And our debits and credits are going to be exactly the same. All right. Okay, so there's transaction number 3, or 2 rather. So let's, I always like to just put a little like color or tick mark or something to show that I've done kind of keep track of where I am. So here's a very interesting one. So in this case, we've received a bill. So pretty much, and I'm not a lawyer or anything, but pretty much the rule of thumb is as soon as you receive a bill from a business, you're kind of like legally owing to them or on the hook to them for the amount of that bill. And so what's happening here is this is actually for our rent, our month's rent. And wow, judging by the amount of it, that's a pretty good deal we're getting on our office space. Anyway, so we're receiving a bill for our monthly rent from Remax office spaces. So it's for $200. And so we're going to think a little bit about what's going on here. So we now owe Remax office in the future this $200. So it sounds like an account payable to me. Then we're going to have to think about, and just kind of keep this in mind for the moment, is this idea of rent, what we're going to do with rent. Okay. So we're going to go to our worksheet here. And so we look at our accounts. And so just as we supposed we have an account payable for Remax office space. So let's throw that in there. There we go. So, and you can just kind of make those columns a little bit wider if you need to. So then the other one, we talked about this idea of rent. Well, there we go. There is our rent, and it's listed as an expense account. Now, if you think about it, that kind of makes sense, right? Every month we have to pay rent. It's kind of an expense. I'm just going to kind of color these a light green here just to kind of differentiate them a little bit. So, so we have our advertising expense, rent expense, salaries expense. So in this case, because it's for rent, we're going to list it in the, we're going to list that in that next box there. Okay. So now going back to our table or our account types. So our account payable, we should be used to the fact that this is a liability. Our rent expense, and again, it's kind of a Grant's tomb question. You know, what kind of account is this? Well, the answer, a Grant's tomb question is where the answer is in the question. And here it has the word expense right in the title. So that's in the question what kind of account it is. It's an expense. So we're going to put an E there. It was for $200 as I recall. So we're going to put that into our money column. Now, supposing this was a new rental agreement and we had just taken up this space on January 1st or whatever the beginning of the month is that we're in. So at the beginning of the month, we owed no rent. Now here it is at the end of the month, and we now owe $200 in rent. So our liability, we now owe more than we did before, right? Now here's the tricky part. So our expenses, at the beginning of the month, we had used no rent service at all from Remax. We were not beholden to anybody for anything. Now, at the end of the first month, we have now used $200 worth of a service. And so we've gone from zero worth of service to $200 worth of service. At the end of February, then, or the next month, it would then be $400 worth of service, $200 for each month. So the amount of service we've used up is also going to be a plus. So then now we have to decide our debits and credits. Well, our liability has gone up by $200. And so where did our accounts payable? There we go. So an increase to that is always going to be a credit. And then our rent expense, we always show increases to that as a debit according to our rules. There we go. That one's done. All right, now in this one, we are actually paying for a utility expense that we have used up. And so it's going to be very similar to the last one, except that there's no account payable. We are paying this from cash for $500, right? So going back over here then, so we're going to pay cash. Where do we get our cash from? Well, we get it from the bank account. And then we have our utilities. So we're going to kind of scan through the account here, and it even said utility expense. So really we only need to look in our expense accounts. Well, sure enough, there is an account there called utilities expense. We're going to fire that one in there. Utilities expense. There we go. And our bank account, as we should know well, is an asset. Our utilities expense is an expense because it has the answer right in the name. And we are paying $500 for this service. All right. So now in this case, we have $500 less than we used to. So that's going to be a minus. And in terms of the expense, again, supposing that this is like the first bill we've ever got, at the beginning of the month, we had used no service, well, or zero. Now we've used $500 worth of service. So the value of our service we've used, this isn't about paying for anything, it's what we've used, has gone up. So going to our chart now, bank, it shows an increase with a debit. Well, this is a decrease, so therefore it has to be a credit. And our expenses, again, it's gone from 0 to 500 is an increase. So that means we're going to list that as a debit. And so that way, again, we've balanced the value of our debits and credits. All right, so here's the last one before I set you loose. We, in this case, are paying the employee's monthly salary worth $9,000. So there's only one way to pay an employee, as many of you know, with cash, right? And so then we have to figure out what we're going to do with the salary part of it. So again, we know the cash comes from the bank account. And then looking over here at our expense accounts, well, lo and behold, we have a salaries expense account. So that's the one that we are going to use. Salaries expense. There we go. Bank is an asset, expense is an expense. And so in this case, it was $9,000 for both. We should know that since we've paid our employees, we now have $9,000 less in our bank account. The value of the expense of the salaries that we've paid out to employees has gone up by $9,000. There we go. So very similar to the last one, we have a decrease in our cash account. That's going to be listed as a credit. We have an increase in our salaries expense account, and that is going to be a debit. So that's the end of the 5 that we're going to do together. So your task now is to do the other 5 and do your best to come up with the correct accounts and debits and credits. Yeah, and in case you're wondering what a grants tomb question is, well, it starts out with the question, who's in grants tomb? Well, Grant is. It's Grant's tomb, so it would be Grant who's in Grant's tomb. So that's why whenever you have a question where the answer is in the question, it's referred to as a Grant's tomb question. There you go. That's from grade 8 math from my back in the day for me. All right, so please do those last 5 transactions and then deposit it to the appropriate Dropbox.